keeping it real in San Diego real estate. Sal, what's up, man?
Another day. Thank you for having me on.
Yeah, great to have you. I've always appreciated your straightforwardness. And so we've got some sort of tumultuous times. I mean, I'm looking in there, the Dow's down 600 points again. We had the largest single day loss earlier this week. We had a really bad day on Friday last week too. So a lot of people starting to get concerned, see interest rates creeping up a little bit. And I knew that for sure you would shoot me straight about what's going on at the street level. So what's the deal, Sal?
So I like to pride myself on being on the streets. Day to day, I am in the trenches. And that's kind of what I've always done from day one to present, is I'm out there touching, seeing, feeling, whether it's that client for that 200 grand condo or that $5 million forever. I've seen them all. So I just don't sit and quarterback it from the office and play that way. It's active. It's coming at me like a fire hose right now.
Really?
Yes. It's been coming fast and furious for like the last 6 months.
Buyers and sell sides, or?
Both.
Yeah. They're
coming out of the woodwork. Been fortunate to represent a lot of buyers this year. All cash, 10-day close, boom. It's, how would I say, these times are very reminiscent of 05, 06, in my opinion.
Really?
Yes. Where
really?
I smell 2005, 2006, and as I look at the calendar, cyclically speaking, again, we're at that blossom. The same thing. It cycles.
10 years post-crash.
Correct.
We're right on there.
We had some stability coming out of 2010, 11, and look where we're at. I see this year to be extremely strong. Last year was strong. It's still holding. We're stable, and it's created by lack of inventory and low interest rates.
Interest rates have gone up a tad. But historically speaking, as we've seen, a lot of times when that happens is, interest rates go up, and then people sort of rush who've been waiting on the fence are like, oh shoot, you mean they're not going down, they might go up higher, now let me jump into action. That could be on both sides too.
Both sides of the fence.
Buyers and sellers both saying, hey, things are changing, I better jump in and do something now before it gets worse.
Correct. I do believe some type of decompression comes. It just cyclically, again, that happens. Cycles repeat themselves. Is it going to be to the thralls of 2010 and 11? No, there's just way too much money to stabilize. Everybody sees the value of not just California real estate, but San Diego in particular. There's way too much money on the sidelines waiting for that decompression to hit. It's going to be small, 10, 15%, and it's very location and price point. High end's the first one that usually gets beat, and it's always the last one to come out. High end has been thriving. Certain pockets of the high end, in my opinion, are things are selling fast.
Well, what's the high end even anymore, though?
They used to say anything over $1 million was luxury real estate. Well,
right.
$1 million is Claremont now.
Seriously?
certain sides of the 92117 zip code, $1 million, yes.
So you can get to $1 million in South Park pretty quickly too now.
Yeah. Well, South Park, if you have that historical period home with that charm and period, oh yeah, easily. I've lost out on a couple over the $1 million range.
Yeah. So we can't really define luxury as easily as we once could. What are you going to say now? It's over $2 million, or I mean, like, where do you draw that line? And so we don't have that clear indicator that I think we used to have. So it's more about, in my opinion, right now, it's more about just motivation. What's the motivation? And do both buyers and sellers have motivation or not? And I think we do. So this actually could be a good thing. It really could be a positive thing if it gets people off the fence and gets action to take place. It doesn't have to be bad, especially if there's demand. So that's the question for you. I mean, is there buyer demand right at this level or slightly below this? Is there support, in other words, for these prices where if prices did come in a few percent, that buyers would be jumping on it?
Yeah. For instance, currently I listed, it was kind of, it basically was a fixer in Normal Heights on 34th Street. I did a one-time open house for an hour and a half on Monday. I roughly had 100 plus bodies through there. Let's say 15% were end users. The rest were investors or long-term holders, or people that collect, so to speak. And I originally thought the price would have been not to exceed $550, and I've got offers peak cresting $600. So here we are, 10% rise when I evaluated this 4 or 5 months ago. And I'm pretty conservative and pretty decent on my numbers. Because I've done enough deals in that pocket recently to have good taste of what's going on. But I was like, well, maybe I am wrong, and proven I was.
Wow.
Yeah.
So from 550, what you thought was very realistic.
I thought realistically, based on that condition, boom. The market, in my opinion, is doing the same thing that it has done in the previous years. But this year was different because the investors were holding back November, December on their acquisitions. The investors were not acquiring as fast and furious as they were the previous year. And going into 17, investors, late 16, were just buying. They all got lucky because in 2017, the market spiked. Well, we saw too much uncertainty in times of 2018. So in 2017, so when we were in the fourth quarter of 2017, most investors, some were scaling back, a little cautious, not knowing what 2018 was going to bring. Well, 2018 has brought, we're seeing bumps again. Not all markets. Basically price points under like that 1-3 range, whether it's Carmel Valley, South Park, Golden Hill, Mission Hill. In that price range in certain pockets, they can't come fast enough and they sell even faster.
Yeah, it's so crazy, huh? But if we see motivated sellers, like for example, we've seen out of the last 9 days, not including today, the last 9 full business days, we've seen interest rates go up 8 of those 9 days.
Correct.
And a lot of that has to do with switching over of the Fed chair. A lot of it has to do with sort of a little bit of uncertainty with the Wells Fargo situation.
Yep.
Wells Fargo, basically, Janet Yellen on her way out, and this is one of the things, this is where politics really gets into this, because it couldn't have been that she just found out this was happening the day she leaves her position.
Yeah.
Not a coincidence. She must have known this was happening for a very long time, but politically would not have survived if she had called them out until the end of her tenure. Politically, she would not have made it. That tells you how big the forces are behind the banks. I mean, literally, the Fed chairperson, the Fed chairwoman, she had to wait until it was her last day to call out Wells Fargo for these abusive practices and actually cap them and say they cannot grow this year. So there's some uncertainty there.
Yes.
There's uncertainty with interest rates, with the new Fed chair, Powell, and what he'll do. So I think that's part of what you're seeing there. A little bit of uncertainty about the direction of the Fed.
I agree. Typically, when the media speaks, there's kind of that halt in the market when the media speaks. But I'm not seeing the halt. I've got a lot of buyers. There's only one of me. They want to go out and look. Saturday, Sunday, they want to look and hunt for properties. And I've been getting outbid in Carmel Valley condos in that $800,000 to $600,000, $800,000 range. 10 offers. So it's not. How would I say it? Buyers, their perception of what the media is saying, I see more necessity is what I think is the right word. I see more of my clients for necessity looking to park their money, whether a lot of parents helping their children out is what I'm encountering.
That's another good point too, because uncertainty in the stock market, as we're seeing, and the Dow is down 600 points last time before we walked in here. I was looking at it, down 635 points. NASDAQ was down 130 points, which is crazy. But a lot of uncertainty in stocks can drive people toward real estate.
I agree 100%. So when the stock market starts sliding down, people take some chips off the table and go, thank you, stock market. Let's put money over into the real estate, because in the rental market, I've seen rents increase could be anywhere from 25 to 40%. A one-bedroom in Metro, San Diego, if it's a casita, one bedroom like 10 years ago was like $1,200. Now they're at $1,800.
Or more.
Or more. It depends how close is it to the coolest bar, coffee shop, dining, park, you name it. They're paying to live in certain pockets of San Diego.
Even downtown, a studio, you used to be able to find them for $1,500, $1,400, a one bedroom, something like that. Not anymore. You can't get anything under $2,000.
Correct, and that's also based on what the real estate escalating. When you have debt service, that little house, that we bought for $900,000. I've got several clients that own homes, and they're like, "Yeah, we're charging $3,000 a month." I'm like, "Yeah, that's when you bought it for $575." Well, consistently we've seen prices escalate and rents escalate. So it's the cost of debt for that home is kind of how you would evaluate what a rent would be.
Interesting. So the rental analysis is based more upon current value than people realize.
Yeah, exactly. And it's working.
Wow. Interesting.
Yep.
So Sal, tell me this. What do you forecast? You know, what's 2018 going to bring us?
Ooh. It's crazy. It's like it's the gold rush days. It's feast or famine. Depends where what market and who your clients are, I guess, for starters. I had a buddy of mine tell me, he goes, Sal, I met this agent. She's got 10 listings she can't sell. And I'm going, 10? I can't even have 2 on the market for a week without 10 offers. And not that I'm underpricing them. Maybe it's just the neighborhoods and locations I'm at. 2018 is going to be consistently strong. I think that if the stock market, how would we say, shakes out or kind of self-corrects itself, we've had a run up in that, what, 20, 30%?
Oh, we made between 20 and 30% last year, depending on whether you're looking at the Dow, NASDAQ, or the S&P. But I mean, we're pretty much straight up from Dow 6,600 to 26,000. So from 2009, pretty much a straight line up to that. So there's a lot of room there, potentially a lot of fat.
Yes, a lot.
That could be trimmed.
I agree. So people, I think they're going to start to really go, hey, thank you, stock market. Let's go to real estate where we can get stable income. Yeah,
that would make a lot of sense, especially with rents where they are. And the demand for people to live in San Diego.
You saw in the news today there's a new local bill they're trying to push through where they're going to increase property tax in San Diego. San Diego specifically, they're going to increase homeowners' property tax, and a portion of the increase is going to go for low-income or affordable housing. Good luck on that one. We are already fighting paying our property tax going, well, why are our streets, why are our roads, where's our infrastructure, libraries and parks? Now we're going to put one more box to check.
That's tough. We are below the mandate, though, the California state mandate for affordable housing, low-income housing.
Well, I haven't seen a lot of. I've seen small infill. So a lot of the trend right now, I'm seeing a lot of developers are building, whether it's 20 or 30 or 40 units or even 10. The city is allowing them to maximum density, but out of that percentage, you do a 10-unit project. Well, you know what? 3 of those have to be for low income. They're letting them exceed the traditional density to provide for low-income housing.
Interesting.
I've seen a couple projects like that where I had a client, we can do 28 units, and if we do 28, we'll have to give like 6 to 10 of those for low income, and if we don't do the low income, then our density goes down. So they're accommodating because it's on a pro forma basis. Cash on cash return, price per square foot.
Interesting. Wow. Well, that's one way to get there, but we've got a long way to go. Let's put it that way.
Oh, there is definitely a demand. San Diego's a tourist town, and it's taken a long. I'm born and raised here, but once I was like 40, I'm like, you know what? Tourism is pretty much what thrives this town. It does now with the Airbnb and the VRBO. That money coming off of it's bizarre. The people that come here will stay for a week and rent a little cottage at the beach, not go to the hotel. They want to be where the locals are and hang out and not be pressed, and they're saving money. It's
true, and also, with hotels, you kind of have, it's just not as private. It's not as, it's a different kind of thing.
It's almost a hospital feel.
It is. It's clinical. It's a little clinical, and I think that's why people prefer not to go that route in a lot of cases, especially if they're somewhat familiar. Like if you're traveling inside the United States, you feel comfortable going to a B&B. Maybe not if you're going overseas or something like that. You'd want a hotel because you want some sort of stability.
It depends how would we say if you're the explorer. You know, some people want that challenge. They want it. Again, I've seen a lot of people that you wouldn't think traveling to foreign countries and not going to your Hiltons or your 5 stars. They want to go where the locals go. Drink the coffee they drink, eat the food they eat. They want the experience, I guess. Yeah. Well, there's a lot of experience in San Diego, a lot of areas. What do you think is the hottest neighborhood in San Diego right now? In other words, if you were going to take a listing today somewhere, where would you, if you got to choose where it was going to be, what neighborhood would you choose? Man, Bay Park seems to be pretty crazy. A buddy of mine, a commercial broker, put his house on the market. I kind of quarterbacked him, hey, what do you think I should price it at? Helped him out a little bit on that. Puts it on the market, and 21 offers in 2 days. 21 offers. And this is a home where priced it, I think, at somewhere low 8s, and he's going to cross over in the 850 range. 21 offers. He was just scratched. He was even shocked. I mean, I couldn't forecast that.
Wow. So Bay Park would be the one, huh?
Bay Park, yeah. Because anything under the $1 million range in coastal, Claremont Bay Park's like coastal now. Because you cross over the 5 into PB, North PB, you can't find anything for under $1 million. You just can't. So your closest spot is going to be Bay Park.
Interesting.
Yep.
All right. Well, there it is. One of the hottest markets in San Diego, Sal Cefalu. Thanks for coming in, man.
Pleasure.
Appreciate your time.
Thank you very much.
Awesome stuff. All right, stick around. We got a lot more coming on Smarter San Diego TV today. It's all right here on Facebook Live. We'll see you soon.